All right, wonderful. Well, thank you everyone for joining us today. Good afternoon to you, or if it's good morning to you if you're still on the Central or West Coast time. My name is Matthew Timpane. I work for Schaefer's Investment Research. I'm a senior market strategist and a CMT, so chartered market technician. We have been in business for 43 years, and we are based out of Cincinnati, Ohio. We've been providing options research for the longest period over, I think, any provider out there at 43 years. We were kind of a bit of a pioneer in the industry. But today I want to kind of go over how I use Fibonacci levels for trade ideas, and we'll do like a brief overview. I'm sure you've heard a lot before. So let me just find the share button here and share screen. All right. There we go. And we'll stop the video. You can see my screen still. So that way, if there's a pop-up window, you can see everything on the chart. It doesn't really matter. I know sometimes that has a problem with a lot of things. Like I said, today we're going to go over how to use Fibonacci levels for trade ideas. Let's get into it. So just a little bit of a background. I don't know if anybody touched on this today, but the founder of Fibonacci, and the Fibonacci sequence was Leonardo Fibonacci. Now, that wasn't his real name. It was really, I think you pronounce it Liber Abici. But he was the founder. He also went by Leonardo Pisano or Leonardo of Pisa, but went by Fibonacci to not be mistaken for others, I believe, in his community. So he posed a question, and this work was published in the year 1202. So, I mean, this is old math. His question was, how many pairs of rabbits placed in an enclosed area can be produced in a single year from one pair of rabbits if each pair gives birth to a new pair, each month starting with the second month? And this led for him to find the Fibonacci sequence, as we'll see here. And I'm going to try to pull up the window here to see if we have a chat window I can pull up. Can't find it right now, but we'll get to that point in a little bit after. I want that to be up for all participants in case you want me to go over any tickers at a later date. But so he came up with the Fibonacci sequence, fairly simple. It, as you can see, it goes 1, 1, 2, 3, 5, 8, 13, 21, and so on. And really what it is, it's just the sum of two adjacent numbers in sequence form. In the sequence forms the next higher number. The ratio to the next higher number is approximately the 61.8 to 1 level. And you'll see we'll do a little bit of math on the next slide here so you can kind of see that. The next lower number is that 1.618, that extension level that we look at a lot, to 1. And you'll see the math on that as well. Further along in the sequence, though, the closer this ratio approaches to 61.8 to be exact. To begin with, you're a little bit spread out, and you'll see that it kind of compresses and comes into those levels as we near that, as you continue to grow within the sequence. Alternate numbers, the ratio is approximately the 38.2, and the inverse of that is 2.618, which, we're looking at another extension. So retracement and extension levels there. All right, so the golden ratio is the ratio that we kind of look for targets a lot often. And we'll look at that in one of the next slides as well. But the golden ratio can be found in everything, or not everything, but almost everything, a lot of things. Things from leaves, seashells, pine cones, pineapples, the spiral that a hawk or eagle makes to catch its prey, chameleon tails, to your own body. There's even things I think where I think media, when they're saying when you're viewing at a camera screen, the perfect level of viewing for your eyes is the 61.8% retrace or level. That is the perfect level. So it has some, kind of, situation here within the world that we keep seeing over and over and over again. So why wouldn't it be found really in price behavior? It's a sequence or just a cycle, really, after all. So below are the examples of numbers in the sequence. I just pulled some random ones here. And you can have fun with it. Go ahead, pull that sequence out as far as you can go and see what they do. I mean, if you go to the sequence of 610 plus 987, that equals 1597. You divide that by 987, you get the 161 extension, 161.8 extension. Do that inverse, 987 divided by 1597, you get the 61.8. And alternate, you can do the same thing there as well. So if you alternate the numbers, so you would take the one number, skip one, and then take the next number. That's going to be the 2.618 and the 38.2. So when they're alternate numbers, not successive, you divide 4181 by 1597, you get the 2618. Same with 1597 divided by 418 or 4181, you get the 38.2. As you can see, it's not exactly 38 or 0.382. It's 0.3819, and then as you go along the sequence, that tightens up, and you'll eventually get to the 0.2. But you round higher, it's at the 0.2 already. So for me, I'm kind of an old school trader, not exactly, an Elliott wave guy by any means necessary. I mean, I've looked at it, had to study it for the CMT, had to have a general understanding of it. But for me, I'm a little bit different. Was a discretionary trader for the majority of my career. Still am a discretionary trader, even though, personally, I am starting to incorporate some more quantitative aspects into trading that just allows, I guess, the ease of getting into trades, in and out of trades easier. But large in part, old school discretionary gunslinger type trader. So to me, when I'm looking at Fibonacci levels, they are really kind of areas of interest. That doesn't mean it should be the only thing that gets you into a position. And we do have the chat, so I'm going to move that quickly. But it doesn't, we don't want to get you into a position just based on the Fibonacci level. I on the contrary to that, I think blindly following the Fibonacci level on its own is a little bit naive. I mean, it is, you see it in the waves, you see it in long-term, short-term, intermediate-term corrective moves, but you always want to have something in there in conjunction, right? In confluence with it. So for me, I'm looking for something that is of significance, right? You can use the 50-day or the 200-day moving average. Those are the big ones that everybody uses. But, I think even better is sometimes you find unique moving averages, right? Like there's certain stocks, we run a screen over at Schaefer's, and we have optimal moving averages that we find for certain securities. So when they're in that area, we get a list right to us that morning. And it can be odd, unique ones too, like the 80-day or the 126-day, which the 126 is just a 6-month moving average, really. When you think about it, it's or the 34-day. These are different moving averages that not everybody's looking at. Sometimes that can give you a little bit of an edge in the trade. And for that, what we do is we look at the prior returns. So maybe that will have something. I mean, a moving average is just a smoothed out basis of price action. So it's not anything huge, but for some odd reason, price has memory a lot of the times, and it likes to follow sometimes a unique moving average, or sometimes it follows the standards, the 50s, the 200s. But find something in confluence. Another thing, I think one of the most important things is major areas of support and resistance or supply and demand. If you can find an area that has huge demand that we've seen, a lot of the times you'll see these huge pullbacks to this area that if you zoom out a little bit, look at it on a monthly or a weekly basis instead of that daily or hourly type time frame that a lot of us are trying to trade in, right? Because I mean, who doesn't want to trade fast and make money? But zoom out and you're going to see sometimes, oh, wait, maybe this short isn't a good short because now I got an area of confluence. I have, major support there, and it's a Fibonacci retracement level on a long-term scale. Honestly, this might be a great contrarian setup where you take the short-term long on it, whether that's through options or through equity, and then, or, maybe you combine it, which we'll go over as well. Another thing that I do like to use is, well, I guess let's just go back to the major areas of support and resistance. Sometimes you do have this align perfectly with Fibonacci levels just due to the nature of it, right? So because you are doing a retrace of, a major likely inflection point in the chart to another major inflection point in the chart. So sometimes you do kind of naturally just get this in confluence. The better ones are the ones that aren't naturally even there. And then the anchored VWAP, right? I don't know if a lot of you are familiar with that, but it's something I like to use just because it tells you where the average buyer has been, whether it's on a year-to-date basis, which I usually use on all my charts, year-over-year basis. If it's a new issuance, I'll use the IPO level. It'll show where have buyers shown up? We don't have a lot of price history. You might not even have moving averages. You don't have a lot of major areas of support and resistance because it's new issuance. So the anchored VWAP works really great for that. Other ways that you can use the anchored VWAP is from, a point of, earnings, or, maybe the company launched a new product where we had this huge gap up. So you can use, the prior low to that to say, hey, this is where buyers stepped in. Maybe somebody had a little bit of a, kind of a inside tip that they're not supposed to have, but you see buyers start showing up ahead of this huge announcement. Maybe that prior low marked really kind of the low there for quite a while. So I like to use that anchored VWAP for then pullbacks, right? So you might get a retracement back to the 50 Fibonacci level or the 38.2, and it's right at that anchored VWAP from that earnings low prior, So round numbers as well. I think we're all familiar with round numbers, obviously 100, 200, 500, 1,000. You can use 50 when the stocks are trading a little bit lower. The old adage, I mean, if you ever read, anything with Jesse Livermore, I believe he said it best, and this is definitely not right, but when typically you go through that 100 level, you trade through that pretty decisively, go to 102.5 or something, you're probably going to see 110, right? So if something lines up with a round number, that also is a nice area to really look at. Don't use really a bunch of indicators. I have nothing against MACD, stochastics, RSI. I've used them all. They're all, great, indicators, smart people that made them. But for me, I like to try to keep it simple. You'll see my candles actually have like a little bit of a blend of some of those indicators in them. That way I know what those oscillators are doing, but it's not really the end all be all for me in the way I'm trading. I rather look at price action and behavior, and that's what they're based off of. So for me, it's just don't litter your charts. And even if you want to look at them, maybe just keep them off, pop them up quickly. You'll see what I do with my moving averages is I kind of do that as well, where I'll pop them up when I'm looking at something. Quick question here. What is an anchored VWAP? So VWAP is the volume weighted average price for the day when you're trading. So if you pulled up a 1-minute chart on the VWAP, right, for the day's trading, you would see the average price throughout the day would be the VWAP. So whether SPY went to 450, down to 440, back to 445, that VWAP, if you put the VWAP on your chart, will be the average price, the average weighted price throughout the day. So that's telling you where the buyers were. A lot of times, if you break that VWAP level, it will, be kind of a sell signal. Hey, the average buyer has been broken. Now we might get the sell signal. Now the anchored part of it is you're anchoring from an event date. as I said, like year to date, year over year, an earnings low, maybe an earnings gap, whatever you kind of want anchored. You want to see where the average buyers have been stepping in to support the stock, or have been, where the average resistance been. So you could do a prior high, and I'll show you, how to do that as well. Where, a lot of the times you'll see the stock will stair step lower into that Fibonacci level, and the anchored VWAP will be kind of near or around from that highest high point, where you're kind of just seeing this price follow lower. All right, let's get back onto it. So, and the big reason on the keep it simple, I just want to say, is really you just want to focus on price behavior. All right. We use retracements to find an area of interest of a counter trend move from a larger up or down trend. And then we use extensions to look for targets on the up or downside where price could move towards. Fibs can be used on really any asset class. It really doesn't matter. Stocks, ETFs, indices, currencies, futures, and then crypto, which I honestly think is the most pure trade on technicals alone out there right now. Signing a value is really tough. It's downright difficult, if anything, if not impossible at times. And I did see there was a question about the CMT. I got my CMT in, what was it? It was 2018, the summer of 2018, I believe. So, yeah, I've been a CMT for 6 years, active participant. I've done some presentations for the CMT and done some hosts. I believe it was Chicago. I did a presentation there for that chapter meeting. I was an active member of the Minneapolis chapter, which was the most active chapter before COVID. And now it's not as active as New York, LA, in those chapters. But yeah, I've been a member for quite a while. I did it because I came out of a value shop where I learned, everything about value investing. But the biggest thing was trying to make sure that, as a portfolio manager and an assistant portfolio manager on some portfolios, I didn't want to get my managing partner and CEO of the company in value traps. I wanted to prevent that from happening. So I really took on the technical aspect there. So that's just a quick overview. All right. So as we know, nothing goes straight up, nothing goes straight down. There is this, kind of move to the market that is through waves and ripples. And this is where really, Fibonacci and Elliott wave analysis comes into play. This is just a simple chart, right? We typically see stair steps up, and we see stair steps down and corrective moves within a larger trend. Simple chart of NVIDIA here. And if, obviously it's been the darling of the stock market for, 18 plus months. And, you can zoom into this chart and you can zoom out of this chart. You can go down to the tick or the minute chart, and you're going to see waves and corrective phases. And then you can go to the yearly and to the quarterly on the other extreme, and you're going to see waves and, corrective phases that happen. So it's there on all time frames as well. But, the strength of the uptrend can kind of be debated a little bit, often by how big that corrective move may be. Oftentimes bottoms near around the 0.382 level typically indicate a little bit stronger of a trend, maybe even the 50. The 50 is a little bit more of a toss-up. And then you have the 61.8, which is the most famous corrective, retracement move of Fibonacci, and the 78.6. Now, love those levels personally as well, but they're typically not indicative of a stronger long-term trend. It definitely can go back to new highs or break out to new highs from those levels. Not saying that it can't happen, but a lot of the times what we see is from the 61.8 or the 78.6, you get a great trade off this level, but a lot of the times you don't make it back to that prior high. You can have a little bit more of a shallow kind of, move as you can see here in NVIDIA. So NVIDIA is a great example. This is why I wanted to kind of show you, look at things that are in confluence here. So you can see NVIDIA's April correction was very much, bought up a lot quicker. If I pull this back, this is on a PowerPoint, but we can pull it back in the chart after. The move was much shallower on a corrective basis from a Fibonacci level. I'm going to guess it's the 23.6 or the 38.2 without even looking. Even though April, had a pretty decent move and it's seasonally bullish move, it caught a lot of people off guard. It wasn't as big. And where did buyers show up? Year-to-date anchored VWAP level right there. So once you broke out of that level, you went out to new highs. Now I'm going to guess there's going to be a fib level somewhere around there, but I wanted to show you where we are now in this corrective phase, which could potentially be a topping pattern. Not going to say it is because it is NVIDIA, and oh my God, their earnings have been stellar. As you just heard from our last presenter, they blew it out of the water. Nobody's really done that, so it's really hard to say this is a topping pattern, but we are seeing a lot of insiders sell stock now. You're seeing their CEO Jensen sell stock and a lot of their upper executives sell stock. Now, hey, who can fault them? It's been on an absolute tear. But a lot of the times when you do see insider selling like that, either you're going to get this long drawn out consolidation phase or you do have a potential topping formation. Again, not calling a top on NVIDIA here. That'd be something I don't think I would want to do unless I see us break these prior lows probably from April. But in that August kind of mayhem, that volatility that we got a pullback, right? And you started seeing buyers actually come step in here at the 61.8. And one of the big things I think is you got this move lower, right? So when it doesn't stop right away, you get a swoosh a lot of the times. And you got a fast move lower, but where did it go right into? The 78.6, the year-to-date anchored VWAP level, and those prior highs. Great spot to take a speculative position on it. And there's multiple ways that you can do that, and we'll kind of go over that quickly as well. But then you kind of got the move back, right? The move back only kind of retraced, all the way back up to 23.6. So it is a little bit short of that ultimate goal of the 100% retrace. You're not going to quite get it. And now we've had weakness again as we're in September, which is seasonally weak, and it's actually a little bit odd to be seasonally weak in the beginning of September. It typically happens in the second half. But we are getting it, and it happens sometimes in the early months of September. It's just a weak month overall. So we are seeing some weakness. And again, I think that says something right there to myself. Now, do we see strength in the second half of September? That would throw a lot of people off. But back to NVIDIA, you saw it got up there. Earnings now took it back down. So now you're reapproaching those lows, reapproaching an area of confluence, and you probably could run a fib level from here to here to see what the retrace is. And we'll do that on the chart itself. The fib extension. So the fib extension, how perfect is this actually? This is a beautiful fib extension of the 2022 high in the S&P 500 to the low, and it operated perfectly to a T. I wrote about this back on our website. We do a Monday morning outlook. Our senior vice president typically writes it, but it was a week that I was filling in, and I wrote about this. We saw this gravestone doji on this weekly chart here on the S&P 500. I believe it was a Fed week, and so we saw late week selling and reversed all the gains. A lot of people were saying, hey, this is it. This is the top. And, as bearish as a gravestone doji is, the thing I kind of thought about was, hey, we have other factors going for us. We're in a super seasonally bullish month. And secondly, the 161.8 fib extension level is up at 56.25. There was a few other factors when I was looking at like open interest options configurations, but I thought like, hey, it just seems like, even though we got a little bit of a bearish week here, I think they're still going to try to run this up into the seasonality. We had some support, like I said, from, it looked like it was open interest configuration, some put support there that was still holding, and then some shorter term moving averages on the daily. So that was my target, that was my call, and it ran perfectly into that 168. Now, what I said when it gets there, and this is what I'll say to every one of you, is when it gets to there, it's not always a perfect short, right? This is not a perfect short right up at the 1618. A lot of the times you'll get a pullback like we did this time, but sometimes you're going to get a stall out where you'll see price will hover around this level. So it's more of a, hey, kind of wait and see how the trade reacts around the level, because you might get the stall out and then it's just going to resume up higher to the 261.8. But right now, obviously with this, with the S&P, we got the pullback. And where did it pull back to, oddly enough? That year-to-date anchored VWAP level. I'm going to guess if I run a fib extension level from the low here or fib retracement level from the low there to the high here, we're going to get a level right here with that anchored VWAP. So while I haven't went down the rabbit hole all the way, why do I think fibs work? There's a wave component to it. Waves, it's kind of a natural law type of thing. I think we all agree that price moves in a wave-like function where we have ripples. I think about it like this. You're kind of like, you drop a rock in a lake and you get these ripples and they come out and you have these waves. And that's how you have the different fib analysis indicators as well. I mean, that's literally, you think about drop the rock in the water and you get the round circles out. That is one way to look at Fibonacci. While I like to look at it from a price behavior standpoint, that is another way right there. So instead of drawing the retracements, you can look at that indicator as well. It's not something I use, but if you do, it's natural law. And if I think Nicholas Tesla said it best, if you wish to understand the universe, think of energy, frequency, and vibrations. I don't see why that wouldn't really have anything that, not have anything to do with price and behavior, when yes, it's, financials and valuations, but people are trading these stocks, and people built algorithms. So there is a natural behavior aspect to this. And there's no way to kind of get around it. I think one of the big things, and somebody said it in the chat, is, I think divergences is one good thing too to use when you're approaching like a fib level. I think ignored levels, kind of like I showed in that NVIDIA, ignored levels really kind of indicate a strong trend confirmation, right? So you're going to likely get this big move. So we'll kind of look at that a little bit more as well. Option strategies that I like to use around Fibonacci levels: directional, at the money. Short and long term, I do like to tend to stay away from intermediate term, and it really doesn't necessarily mean at the money. It could be slightly out of the money too. I don't like to get too far out of the money. That's just not how I am. But directional, in the money, stock replacement as well, short and long term. So let's just talk about the short term. A lot of times I look at these big levels. You see this big weekly level. Stock looks horrible on a daily chart, but there's this huge weekly level. You often get this pop where, a lot of people are thinking, hey, this is a good short, or there is a lot of shorts into it. So you'll get the pop off of that. And that's great for short-term trading. The second way to kind of look at it is, hey, this level is huge. I have a defined stop level. So let's go out longer term, at least, 4 months. And I know some of our programs do, like 4 months. And some of them don't do as long as I would probably do at some of these levels, as 6 months to a year, but it's something you guys can definitely do. Look at it from a 6 month to a leap option even. This is a huge level, and you have a real defined, support or resistance level to trade against. If it breaks and you're in that longer term option, you're not gonna, be hurt as bad. You have a lot of time left in it, and you don't have time decay working against you. And I think I just answered what the short and long term. So short term, I'm looking anywhere from like 0 days to 30 days. And then long term, I'm kind of looking at least 4+ months, preferably, honestly, 6+ months in that aspect. The intermediate term to me is more 30 to 90 days. You can also look at like credit or debit spreads if you want to A, reduce costs on a trade, or B, use kind of some of the decay levels. So on like a short-term basis, you could use that credit spread. You don't want to get too aggressive maybe with it, and you want to just say, hey, let's just eat some of this time decay left here. We got 30 days left in it or something. And this is a level I think that can pop. Maybe we can take this spread that's worth 20 cents down to 5 cents and get out of it quickly. Otherwise, straddles as well. Straddles is a good option because you're going to see that volatility. Again, if you break through that level, you could get a big washout. Straddles a good option. And I would kind of lean towards shorter term straddles here. You're making a bet that there's going to be a volatile move in the short term. Because, for me, I like looking at, hey, it was a big move to a big level. Better than sitting there buying a straddle that's been in a consolidation phase where you have really tight Bollinger Bands. I think straddles are almost better operated when Bollinger Bands are extremely contracted and you have price freely flowing and volatile. So that's why I say straddles. Quickly, since we're in the middle of the presentation here, we do have an offer for everyone. It is our Quick Hit Trader. You can try it out for $15 for 1 month. You get 10 to 12 simple option buy alerts each month. All trades can be delivered to email or text message. And then some of them are, literally turnaround overnight trades. So just to go through what does the service exactly have in it? It has our overnight trader, which is deep in the money trades, where the next day we either take the stop loss or we take 50% profits to reduce risk and then let the rest run to targets. We also have a 1 to 3 week deep in the money directional trade service in there as well that you get about 4 trades a month from. And then you have what we call the weekly volatility trader is in there as well. And that is a weekly straddle type play where we're looking for these huge areas of extreme overbought, kind of area where it has, a lot of things that line up with it, or extreme pullbacks where we're trying to get a big move, whether it's a continuation and a big move, break of a big level, or a big pop off of it. So give us a call, 1-800-448-2080, or send us a text at the number 513-675-0167. Just mention Quick Hits code and you'll get $15 trial. All right. On to, and this is from another presentation, but just so you can see, when I talk about time decay at the money options, as you approach expiration, you see it's non-linear. This is what I'm talking about, why we try, like, if you're going longer term, you're not going to have this problem, right? So short term, we got to have that volatility now. So, that's where you get those 200, 300, 400% wins. All right, let's get charts up. All right. So we still have, looks like 27 minutes roughly. So if anybody has any requests as well, I got a bunch of charts here, but if you want to look at something, we can take a look at it as well. I like these to be interactive for everybody. It's not about me, it's really about you. I'm going through these charts every single day, no matter what. Let's take a look. Let's go back to NVIDIA. So just for an example of, like I said, like a 1 week straddle here, if you would have played that, let's see if I can pull up an option montage quickly. Let's just see what a 1 week straddle roughly would be on an NVIDIA. It'll obviously be a little bit different, but not too terrible. Yeah, so we're trading at about what, 112 right now. You're gonna get a 1 week straddle at 750. Chances are here could have played that was a Friday. So yeah, it'd be a little bit cheaper. I would say you'd probably get it for about $6. It would have been about there. So say you would have tried that 618. You saw these buyers kind of show up here. This is the 80-day moving average as well. And I'll show you, because I don't really love always having all these moving averages on. I literally use one moving average thing so I can pop it up on and off. But if you would have bought that, it would have been about $6. guaranteed. I mean, you would have got to move that put would have doubled in price overnight on that, and you could have sold it, right? You probably would have sold that put side for $8 maybe on that big down move there. You see it coming to confluence, you'd have a free call. You know, it could expire worthless, but you probably would have, you know, got about 20% overall profit by just selling that put side on that whoosh. And then, hey, look, it regained the 61.8. You could have held on to that for the next week, and you know, next Friday, you still even the next, you know, sometime in Wednesday, you could have taken that for profits. So a lot of the times, you know, that's where you're looking for it. You can always do maybe 2 weeks out too if you wanted. You know, it obviously would have worked out a lot better if you would have done 2 weeks out, but would have been tough to take profits maybe on that move lower, doing a straddle on a 2-week basis. All right. 3 to 6 months on NVIDIA, Amgen, and then what does the quick service cost after the initial month? It is $449, I believe. But you do work with our reps, and there's always deals. And if you do annual or anything like that, they always do a deal for you usually there. So if you give them a call, you'll talk to one of our representatives, and they will help you out. All right. Note's gone. Shirt gone. All right. All right. And Katie actually added to the tab, everyone. So $190 a month, $199 a month, and longer term for bigger discount. Perfect. All right, that's great for everybody. All right, NVIDIA 3 to 6 months. All right, so let's look back here. Even here, look at the weekly chart. Where did this breakout really start? Breakout really started here, right? So you got this big move, recent move, and let's just take the prior low to it. And you're kind of pulling back when you start going back longer term to 38.2. So this is a big level. This is a level that price is going to want to hold. It's a strong level, but we're on a weekly scale. You know, and that's one thing that we'll kind of look at. You know, so that's why you see pullback, even though after earnings, you know, earnings, people weren't extremely happy with it. It wasn't as big of a beat as the prior earnings. It was still a nice beat. They were just more disappointed. But where does it hold on the longer term, you know, weekly type of scale here from that breakout point, which I would consider is a big point because, you know, you had literally what, 8 months of consolidation, 9 months of consolidation there before it took off again, you know, and that's after already you had a big move from the lows. So, I mean, yes, this is split, but that was, you know, a 300% move from the lows of 2022, you know, 400% move. So, you know, you had this big consolidation and break, you're holding this level. This is why you're starting to see also that 61, you know, 8 level I told you about is holding there. So a lot of the times when you're looking at Fibonacci levels too, and I'm just going to say this, and I didn't say it during the presentation point, this level here, the 236 or the 382 or the 618, if you're looking for the 618 from, you know, say you have an extension on, and you're looking for the target of 1618 up here at, you know, whatever, 160 or something it is, or whatever number it is, and you're seeing, you know, it's trading around the 618 number, well, that's just the inverse of 382. So, you know, you don't have to always switch that up. Just know what you're kind of looking at is that, hey, I got to inverse this right now. So this, you know, we're looking at the retracement. The retracement is the 382. But then when you look at the extension on this, is because it's the pullback, it's down to 1618. So just reverse it in your head. That's just something easy to use when you're looking at your charts. But yeah, I mean, so longer term, it's holding this 382. You know, there is a chance now that we've had 2 kind of pullbacks. We've got this higher low that we could finally get back now to this 100% retracement level. And if you break out of there, I mean, I would expect, you know, you're probably going to get an extension. And that extension, you know, let's just take a look at it. You want to look at that. Breakout point. I did it again. I did it backwards. There. Wish there was a hotkey for it on TradingView. So yeah, I mean, if you break out of 140, you know, what 200 in the cards, nice round number, a place that you would want to target to take profits if you're looking, you know, and that I would say, hey, you're going to be looking a lot longer term there. That's probably going to be a play at least into 2025. But hey, I mean, we've seen really crazy rallies come out of October that if this is the low, you know, they front run the low a little bit for October. You know, I mean, doable by Christmas, right? November. You know, if things heat up, you know, you never know. This thing does like to go. I only see lines, but do not see the fib numbers. Okay, let's see the fib numbers right here. Let's see if I can. Can I make those fib numbers better, bigger? Visibility. Text. Font size. Hey, here we go. That better? So yeah, so again, like I said, it's retracing to the 38.2, which, you know, inverted is the 618. So when you're looking at the extension up to there. All right, I think a great example, and it's something I've traded well throughout my life, and it's kind of, you know, or at least recently, and it's kind of a crazy stock, right? Carvana. So Carvana, we took this prior low, the May 2023 earnings low, and then to the July 2023. This is just the start of it. So we see, where did the pullbacks go? Into 38.2. This was a great entry area here. If you want, we can throw on some of these moving averages so you can see as well. Back in August 2023, came down to this 50-day moving average. You got the pop. So you had a confluence of the 50-day moving average with that 38.2 retracement level. Just remember, it's the inverse. You got the move back to prior highs. So let's remove that one. Next one I did. These are trades I remember. Next one I traded was a move back to the 61.8 fib. This was in a short-term service here earlier in February this year. So we got this earnings move, you know, this low into this earnings move over here. Actually, I think I traded it here as well, which was a little bit different setup. Didn't have anything to do with Fibonacci though. But this was the second time I traded it in February after November's move. So we got this pullback here, and we got to move into kind of this 80-day and the 61.8 fib level. And, you know, you saw it in this 50 days right there trying to hold, and you had a short-term kind of burst. So we had also in confluence with that was open interest levels. There was a big open interest level at 40. I didn't think it was going to break. It came from these prior highs, right? So back here, when you're looking at these prior highs, let's zoom in so you can see it. We had these prior highs here. So you had a confluence of support from the huge breakout level, and then there was a 40 strike put level there that was just massive. So we were able to get into the trade. You know, once it broke above that 50-day and that year-to-date anchored VWAP level, I mean, that thing just shot out like a cannon. That's why I like to trade things like Carvana. But I mean, the lesson here with Carvana is it likes to act in waves. It's just a wave stock. Come back. Where does it pull back to? Pulls back to that 38, you know, kind of get that little swoosh down to the 50. Again, nice pullback area. Undercuts this 50-day, fakes a lot of people out. You'll see that a lot in stocks. They undercut the moving average because everybody's looking at them. So that's something that you want to kind of watch and look out for, is these undercuts are a lot of times they're good entries to get into a position if you think there's something else there. What else was there? You know, it looks bad because it's underneath the 50-day, but you had that prior gap level. You can use a stop right there, or if you want to give it some room, you gave it room down to year-to-date moving average or year-to-date anchored VWAP moving average, which also coincides with the 80-day down there. So that's a way to kind of look at that. And I believe the next wave did the same thing. Earnings spike higher, the earnings low. Where did it pull back to? 50%. You know, started kind of seeing buyers start stepping in at 38.2 and resume higher. So you got the breakout, you got 38.2 held, and you got these short-term moving averages starting to expand and move higher. You got the 50-day perfectly holding. You know, this is a nice area to get in and try to take a test back to that prior high. You got to move right back to it really quickly. So it's a great trading stock to use Fibonacci on. I don't see any others. There is some, so, you know, you think, hey, maybe it's just stocks that trade on a regular basis. It's not. Let's just see here. So let's get rid of this. This is Tyler Technologies. Not a lot of people trade it, but price behavior works on it quite well. So where's the retracement? Retracement goes to 38.2 after a big earnings beat. So we take the prior low right before earnings to the high. We see it pull back 38.2, Tyler Technologies, TYL. Not a lot of people are in this name, but it's been a mover all year long. I don't even know if it trades options. If it does, it's probably highly illiquid. But, you know, you can find it even on obscure stocks that you're going to see these same moves. Pull back there. All right, let's just go here. All right, so then you take the prior high to the next low where we're seeing, okay, well, we got a little bit of a move higher. Where can this go if this breaks out of 100%? Well, it's going to go to the 161.8. So it moved to 526. See it stall out there a little bit. Hangs out around the level. You know, maybe this move lower would have got you out on earnings, but, you know, if you took half off already, maybe you would have held and said, hey, you know, I'm going to wait to see if it stops it out for the rest of that break even at the round 500. But, you know, I got, you know, captured $25 here on this big move, taking half off, and we'll see what happens. But then you got the move up higher. So where did that go? Overshot the 2618, but pulls right back to it. So it's a level that it kind of likes to stall out at, and now you're kind of just treading on it for a while until it wants to make its next move. So that's kind of the things. I mean, you're going to see it. It doesn't really matter what stock it is. And like I said, I have all kinds of examples, or crypto, right? So let's look at Bitcoin. Pull this out. Corrective move. Where are we? Crypto looks horrible. You know, Bitcoin looks horrible on a daily time frame. Well, where are we finding these lows? You know, this is the 61.8, but when you look at it from a retracement standpoint, that's the 38.2. You know, you're looking for the extension of, hey, if this breaks out from prior highs, what is the extension? It's 110. So you have a move all the way out to 110, and I see that font size does not carry over. But, you know, that's where a lot of people are getting price targets from on crypto for 100K. You know, so far, even though, you know, you look at Bitcoin on a daily scale, you are below this year-to-date anchored VWAP, so I don't love it there from a short-term standpoint. You are below all these moving averages, and these are all exponential and simple moving averages, just so I can see quickly. I really don't love them on all the time, so I'll take them off. But, you know, you're seeing all of them move lower. So, you know, on a daily basis, this chart doesn't look that healthy, but we keep finding lows down here. So on a longer term scale, could be a good entry position around this 50,000, 54,000. You start dollar cost averaging in, you know, use the 50,000 level as like your stop loss possibly. That's a nice round number. You know, I mean, with crypto, you have to have a larger stop loss, obviously. You're looking for, you know, 30, 40, 100% gains. You know, a 10% stop loss is kind of reasonable. You're getting 4-to-1 risk reward on that, 10-to-1 risk reward if you're really looking for a big move. So, it's definitely reasonable. Oil happens in commodities too. So let's just look at it. So the late December move lower. So from that low to 2024's highs, where did we kind of get a pullback to? You got the pullback right here to the 50. Once the 50 gave it up, you got a quick move through the 61.8 and all the way down to the 78.6. But then you get that same kind of bounce, 78.6. Why did it bounce there? You have a little bit of confluence of support here. It's reasonable to think that, hey, 70, 72 is going to probably bounce it. You might not expect that you're going to get a move all the way back up to 83, but you could have expected, hey, I'm going to get a move to 75 or 77. And you get this bounce back. And where does it go? It fails prior to those highs. Again, it's just another example of the 61.8. Once you kind of get down there, you might end up putting in that lower high. So, and then you see the continuation back down, full retrace now. Actually, this, yesterday broke down, now trading back to the full retrace point. Soybean, you want to look at it from a short perspective instead of a long perspective. Break out of this 100. Where is your short target? First short target on soybeans was exactly at 1,052. Where does it kind of consolidate and hold before it re-breaks to kind of try to go down to that next target level? Right there. So it doesn't really matter what you're trading. It's going to work, when you're looking at fib levels. Coinbase, one that we love to trade. I think I have a little bit of a double up here. Maybe not. Oh, that's what it is. So Coinbase weekly chart. 2022 low to the high. This is a nice proxy for Bitcoin, right? It's not quite Bitcoin, but it's got a lot of price tendencies tied to it. Where's it trading now? It's trading right around this 50 fib level. It's sitting below it. Good chance, you could see another pull down to 130. If it recaptures this 50, that might be the saving grace, but where would you expect potential targets? Well, the first move you would look for around, probably 186. That also happens to be these prior highs here in early 2024. And then you would expect, hey, if we can get through that, the next level likely is going to be this round 200 level where we have this year-to-date anchored VWAP coming down nicely into it. So that would be the levels I would be looking at on Coinbase if I'm looking for an upside trade. So recaptures, 157.5, holds above there on a weekly basis. Certainly could see that 180, 187, if not 200. Let's see what else. ASTS, it's been a name that's been traded a lot lately. A lot of people have been trading this, and it's going to be a name you're not going to want to get stuck in if it does go lower. But again, how are we looking at this? The prior lows to that big earnings breakout that caused all this, to the high. Where are we finally starting to see a pullback here now? You didn't really get a pullback. You got very minor pullbacks, and then this huge move higher on the next earnings. So from earnings, where are we getting the pullback? 38.2. If this thing wants to go, this is going to be the low. If this wants to retest 39 or more, this will be the low. And then you'll see a move back to that 39 level. PLTR, another great example, actually. So, all right, 100% retracement, huge earnings move lower, but all of a sudden we got this huge gap up, right? So we got this move lower into earnings and a huge gap up. All right, so let's take that prior high to that low. Those are two huge points, huge wick there, huge wick there. These are major points, and that's kind of the whole message with the Fibonacci levels. You're usually looking for major points to run them from. Well, where did the target go? Once it broke out, it pulled up, came back, retested those highs, but the ultimate target where we finally got kind of a big move after the S&P 500 inclusion, $35, almost to the penny. So that's, you know, just a great way to use targets. So you got the 160.18 target right there on Palantir. Now I know we only have a few minutes left, so let's just see if pull this back up. So if you'd like I said, here is that for you. Again, if you don't got the number 1-800-448-2080, I think it's in the chat as well. There is a link in there as well that you can go to in order, but I wanted to just make sure you all saw this again before I get cut off here. And I am losing my voice, so thank you for bearing with me. If there's anything left you want to see, let me know. This was a name, Taiwan Semiconductor. It's a name that I'm in on a long-term basis, as well as traded a short-term recently. On a long-term basis, it was my money show pick of the year. It's doing quite well, obviously. You know, started around $99, and you know, it's almost had 100% return. Now we're back down to about 60-some% on the year. But you know, I mean, longer term, it was kind of a situation. I did a recap on this now. You know, I was really targeting 145, but we broke out. These were prior highs, right? So these were prior highs from 2022 and then 2021. So I figured once we broke out of here, the next target we're going to really have was this 197.8. So as long as we kind of hold like the 200-day moving average from a longer term perspective, you'll see those coming up. That's the exponential. That's the standard. And we hold these prior highs. You know, I think you still want to have a piece of it. You know, if you got into it in the beginning of the year and you're still up 50%, 40-some% at this level, you know, hopefully you took some profits along the way, but it might be a nice spot to re-add to a position and look for that $200 level on this. Now, I also traded it short term recently, and it was right here, this year-to-date anchored VWAP level, and I'll show you why. All right, so we had the 618. It was a 1-week trade. I believe it was the 142 call. You know, I got this huge move. Trust me, did not expect it to go that much against me. But it moved down, went to 786, and then rocketed back higher. Regained that anchored VWAP level, and then had just a great week. I mean, you couldn't have asked for a better trade, you know, to get in and for people or subscribers to get in, because you had opportunity. You know, it was definitely scary on that big wick lower, but I mean, you're able to get good entries and you're able to hold on for a nice gain. You know, I think the next day, I think it was, you were able to take like 100% profits, and that was on the average weighted price. So some people probably had over 100% at that point. You know, and then through the week, a lot of people probably were out for 200, maybe even 300%, depending on where their entry was. And this was deeper in the money, so it was a safer type of play. And we are at the minute mark, so I'm going to guess I will be cut off here. I'd like to thank everyone for staying with me for the hour.